This is
Essential.
This is Essential Audio.
Welcome to the Money Pot Podcast from Money 2020. I am Rachel Morrissey, the content producer in the U.S., and I'm here with Sanjeeb Kalita, our editor-in-chief.
How you doing, Rachel?
I am okay. How are you?
You know how it is.
Hanging in there, yeah.
Yeah.
So we're doing a special episode on the coronavirus and what it means to fintech and financial services. And we're going to discuss some of the effects that we are seeing and looking at possible changes that a pandemic like this might actually affect. One of the things about this episode that should be clear is that this is not going to be a complete review of everything that is possible. We could do hours and hours of podcasts on what is going to happen with the financial markets and with fintech and the coronavirus alone. This is going to be an overview of the things that we're seeing, and we possibly might update this podcast in the future and continue putting out emergency podcasts as we see systems or interesting things develop. So, obviously, the necessary measures that cities and countries have taken to flatten the curve of the coronavirus and keep it from spreading beyond our capacity to deal with it have had some really adverse and worrisome effects on the entire economy, not worse than the virus itself would have, but still. And every sector is being hit, whether you're in Wall Street, Main Street, consumer, business owner, you're likely feeling the impacts already. So let's start talking, and I'm just going to talk to Sanjeeb, and we're going to get his insights and some of the things that we've said back and forth. So, Sanjeeb, you and I both read an article on the effect on capital markets that this is going to have, or that this is already having. And one of the things that was sort of interesting to me in that article was the way that it was affecting existing debt securities and other borrowings. So, can you talk to that?
Yeah, definitely. And just to be upfront, I'm not a big capital markets guy, so this is more as a consumer finance professional looking at that space. And what that article did talk about is that a lot of when a company raises capital, either through debt or equity, there are a lot of legal terms and laying out of when things might be within the bounds of normal, what would call normal. And the article basically pointed out that this COVID-19 issue that's impacting the world at a biological level, at an economic level, at a societal level, at a political level, it does not fall within the bounds of normal, or even within the bounds of what they would describe as force majeure. And so it was almost talking a little bit about how a lot of the existing agreements and documents might need to be redone or retrofitted. And with the absence of that, there could be quite a bit of uncertainty about some of these funding capacities.
And so I was thinking about that, and I'm looking at what's happening with our VC funding, and VC funding was kind of already in question. It was already soft, partially because of different effects that other trades and mergers and acquisitions have happened. And then I've been looking at the mergers and acquisitions, and there's some threats to mergers and acquisitions that are happening as the stock market tanks because of the amount of funding that will be available. So I guess my question is, as you're thinking about that in the light of VC funding or the light of these other effects, what do you see happening there? Do you think that that's going to just correct itself when we've kind of gotten through the tide of this, or do you think this is going to have a more permanent effect?
Typically capital for VCs and actually M&A activity as well tracks with the economy, or is cyclical. It's not counter-cyclical. So, for example, when you're thinking about doing an M&A transaction, you can either complete that transaction with cash or with your equity. And with the markets the way they are right now, the equity that you're using to make that transaction, it's going to be an expensive transaction. But if you're a company that has a lot of cash on hand And, you could actually buy a lot of things on the cheap at this moment. So, I think the answer to that is a little bit on, what's in your corporate balance sheet at the moment. And that's looking at the M&A side. On the VC side, 20 years ago, during the dot-com crash, I was talking to a VC about like how, this probably means that the businesses that they're trying to look at are not doing well. And the comment then was, I'm looking for for businesses that can do well in these times or that are independent. So, I think that there's an opportunity for VCs. And once again, like if you have powder in the keg, as they'd say, you could actually get investments at good prices, maybe good terms, from the investor perspective. So I think that, there's opportunity short term too. And, once again, long term, I do sort of, there's sort of tends to go back to the medium.
Right. Well, I think that takes us to our next thing, which is we're talking about your idea of flight to quality, right? I mean that's what VCs are looking for. They're looking for a business that is resilient through these kinds of shifts and changes, or things that can immediately recover and can keep functioning that way. So, as you're looking at the flight to quality, do you have any ideas about who the winners and losers might be?
Looking specifically at, the fintech market, looking at, consumer finance, looking at even consumer retail services. During times of downturns, business models that tend to have a lot of fees, that are fee driven, as opposed to usage driven. So like in the context of like if you have a credit card with high interest rates but no annual fee versus a credit card that has a annual fee but maybe even the interest rates are a bit lower, you're going to go with that second type of product. That's going to be more interesting, from a business model perspective. So, and looking at overall various sectors, and this happened during the Great Recession as well. I think like payments comes to the forefront again, and so that, if you're looking at the financial industry, could be an interesting place to look at.
Yeah, I think there's a couple of things that leads us to in our next one. Retail, as we all know, is already struggling, especially brick and mortar. They're having a hard time transitioning. Anybody who hadn't transitioned to both digital and brick and mortar or some version of that is all behind the times anyway. But what do you think this is doing to the retail sector, and not just in the short term? What do you think this is going to mean long term for the retail sector?
So the retail industry has been challenged as consumers have increasingly gone digital, gone to their mobile phones, and stopped going to malls, stopped going to as many brick and mortar locations. So they were already challenged. Now you've got a case where it's biologically could be dangerous to go to crowded locations, and so that really heightens that the lack of foot traffic in retail. But on the flip side, if you have an e-commerce play, that can make things much, much better. Additionally, going back to the brick and mortar, so like I was talking to a grocer here in Virginia that did a month's worth of sales in one day. So, if you have goods that need immediate fulfillment, there's no better place than brick and mortar. And then actually one thing that I'd like to turn back to you, Rachel, is that because I know we've discussed it, is sort of the effect on small and medium businesses. And, would love to hear what your take is on that as well.
Yeah, I've been thinking a lot about the small business and getting through this crisis, right? So I was talking to Brent Beardall from WaFed about this because they've decided that they're going to put out a credit extension for small businesses up to $200,000 to keep them in business through the crisis. And I've also been looking at like the alternative funding for small businesses. I think that they're going to have a widespread program to basically extend the Federal Reserve's lowering of rates to small businesses and to keep them afloat. There's so many different factors, and you're not going to be able to pay anything back for a while. So I think there's going to be a large extension of credit to small businesses, and I think it's going to end up being backed by a lot of different governments, because I don't think there's any other way that survives. I mean, small business is 90% of all jobs in the U.S. And I don't think the number varies greatly globally. So while these big companies, hopefully a lot of them will do the thing that they need to do to keep their employees, I think that a lot of aid is going to have to come to small businesses about that. And I think that we're going to see a lot of them fold, especially even after the crisis, because they simply won't be able to make it up, even with an extension of credit. So let's look at the next one, and this is my favorite one. Launder your money. And you and I have talked about this, and when I revealed this to a couple of other people in our organization, they were kind of aghast. But cash is actually pretty disgusting. It's got a ton of pathogens on it. It carries a lot of bacteria, and the fact that it has to be handed hand to hand makes it kind of a liability for, everything that's going on. So let's talk a little bit about that. What do you think that is going to end up doing to the cash?
Yeah, that's a great question. And you think about it, you take a bill that's been touched by hundreds of other people who you don't know, and then you put it in your wallet, and then it's in your clothes, you bring it home. That's patient zero in your house. And then if you look at even the professions that are at risk, so for example, healthcare workers, actually cashiers are also right up there. So I think that this will cause a movement to electronic payments, first of all. So, and then also electronic payments that are contactless, that don't require touching a pad. So, for example, if you insert your card and then need to type in a PIN on that keypad, think of who else has touched that PIN. Whereas if you have a contactless card, a wireless card that you just tap, and then that there's no other required method, or you scan a QR code, that also does not require physical touching. So I think, I can see from a user experience perspective, I think those are types of user experiences that are going to be cleaner from a biological perspective, which will then lead to consumer preference.
Yeah, I 1,000% agree with you. I think if there is a winner in fintech on, this, in particular to this crisis, it's the contactless payments industry, because they've done all of this stuff. We've looked at money. Not only is it all these pathogens, not only is it an exposure rate, and you're absolutely right about the point of sale. If you have to touch it and they have to touch it, you're exchanging things, and also you're in a proximity. And I think this is going to make people hyper aware of how many things they touch that other people touch. It's just a no-brainer to me that contactless payments and digital money is going to be a big winner in this crisis, for good or for bad. I think that it's going to promote a lot more towards cashless societies. They're going to have a lot fewer issues with the transfer of pathogens and things like that. And we just forget, how much we touch that other people touch. Okay. So let's go to the next one. We titled this, Neither a Borrower or a Lender Be. So Sanj, why don't you take us through that?
Yeah, sure. So the lending industry is, built upon a lender giving someone capital up front with the promise that that person that gets that capital will pay them back at a later date, which is dependent on them having a job or that business getting enough income to pay back the loans. So during times of recession, businesses tend to have a tougher time making profits, and then you have maybe consumers or people being laid off from work. So you've got a situation where the payback rates on these loans drop quite a bit, and which leads to a lot of charge-offs and write-offs. So there's a pullback, but then when things turn around, that opens up new opportunities for startups. So for example, when the economy, after the trough and it started to improve again, because the banks had pulled back so much on, for example, small business lending, that opened up the opportunity for all these new alt lenders that were lending to small and medium businesses. And that's sort of how they gained scale and were able to build their businesses. So it's sort of on the immediate term, there could be a lot of danger. But if you, are able to manage your losses correctly, that could lead to great opportunity. The other thing that will impact the lending industry is that when things are going south, the really prime segments, the businesses that are still making money, the consumers that still have their jobs and are able to pay their bills, there's an even greater premium on them. So then everybody really goes nuts trying to get their business. What are your thoughts, Rachel?
Yeah, I mean, that's a given. I think that there is going to be a lot of people who are desiring to go after a very few. I think this is a little bit related to the flight to quality. The money is going to float up towards the ones that have a lot of liquidity, that they have a lot of resilience, so that their business models are less affected by emergencies or problems. Okay, so our next one. And this is my favorite, because in a time of crisis, we always like to point the finger, and our favorite finger to point, or our favorite person to point at, is always the government, which is always a them. You always can count on the government being them and not you or anything you're a part of. Let's talk about the regulators. The regulators, are they going to be the heroes? They're going to be the villains? They're going to be just the kings? Like, what is going to happen here?
Yeah, I think that the regulators, they need to be the heroes. From a couple of different perspectives, and I'll even broaden it out beyond regulators into even just to governments in general, because from a regulatory perspective, it needs to be support of new technologies or support of new funding models, even new distribution models, to help alleviate the pains that the economy is feeling. You have that on one hand, and then on the other hand, and we saw this in once again in the last recession. You had, for example, the sovereign wealth funds that were called upon to provide capital to sectors that no one else was able to provide. So I do think that, for example, even looking at that global supply chain and looking at the sort of the cross-border transfers of information, of capital, of even potentially people, I think that there needs to be some regulatory abatement of existing hurdles that might be there.
I completely agree. I think that the regulators, I'm hoping that the regulators are given the chance to be the heroes here. I mean, a lot of that's going to depend on when and where they are, what part of the globe they're sitting in, and what their governments are allowing them to do. I think this is going to be a big win for RegTech, actually. I think that the faster that RegTech can implement some of the different kinds of innovations, the way that regulation can be issued quickly or changed quickly and reissued into for software compliance, is going to be a big deal. Okay, and we are at our very last one, which you titled, and I love this, Freaky Friday for Banks and Tech. So last time, the banks were taken to town by the regulators, and technology was looked upon as a helping hand. This time, it might be looking a little bit differently. So what do you think about that?
Yeah, no, and I think this sort of plays into a little bit of the hero conversation that we just had, because regulators will work with private companies in tandem to resuscitate the economy. Whereas in the last recession, the banks were capital strapped, and you had other sectors that were, like, for example, tech, that provided growth opportunities. I think that this time the banks actually their balance sheets look pretty good overall. A lot of times you tend to fight the last battle, and I think that's sort of what happened here. So the banks look actually pretty good. Meanwhile, you look at the economy, and what's going to help the economy is adequate allocation of capital, helping sort of manage cash flows more effectively, and you're looking at things that are very dollars and cents, if you will, and so I think that falls into the bank's wheelhouse and their sweet spot. So I think that they could actually wind up on the other side of this coming out quite well.
Is there anything else you want to add, Sanj, before we wrap up?
No, I mean, I think that, the only thing that I'd add is that, we're in unprecedented times, and I guess first of all, make sure that you're personally safe and sound, and then I think the other thing that's going to happen is that we're going to need to be thinking about things in a more communalist sense, like thinking about others, like they're telling us, like, if you're sick, don't go outside, don't go to don't go to a party. So I think that thinking beyond ourselves is something that I encourage everyone to do. That's what I'm trying to do, and this will pass, and I'm sure it'll be it's always a new battle, but as long as you can fight, that's the main thing.
I think I completely agree with you. I think this is going to possibly lead to a more communalist attitude. I was thinking personally about the different historical things that have happened that echo this, right? Just the large challenges that people have faced as communities and cities and nations, and how that sort of changed the nature of how they thought about things and pulling together. And I'm wondering about this bringing that kind of shift in our thinking a little bit. So everybody out there, we all encourage you to wash your hands, stay home, and we definitely want to flatten this curve, and we definitely want to mitigate the effects of this on everybody, both health-wise and on the economy. So with that, thank you so much for tuning into the Money Pot. Sanjeev and I were delighted that you're joining us, and we hope that we will be able to come back very soon with another update on this.
Thank you, everyone. Thank you, Rachel, and look forward to continuing the conversation.
This is
Essential.
This is Essential Audio.